Are you wondering what you pay when you work with a financial advisor? Let's uncover all of the costs as well as the value that you receive in return. Hi, I'm Quinn Waddington, Senior Investment Advisor and Portfolio Manager. And I've heard a ton of different things from different people over the years. Things like, I haven't heard from my advisor in years. Or advisors are too expensive and I can get the same from a discount brokerage. I've also heard people saying they have no idea how much they're paying. Or, the one I hate the most, people saying that their advisor doesn't charge them anything. The truth is, between planning costs, investment charges, and other hidden fees, you are paying, even if you don't know it. The real key is, are you receiving value for the costs that you're paying? This is advisor fees uncovered. Let's see what you're really paying and see why it matters. We'll start with planning costs. Planning isn't free, but it can be worth every penny. Planning costs are part of your total fees, whether it's a flat rate, an hourly rate, or a percentage of the investments that you hold. But here's the issue. Many investors don't even realize that they're paying planning costs. One couple I now work with thought that their investments were free because they had been longtime clients of the institution their old advisor used to work at. When we reviewed their portfolio, they were shocked to find out they were paying over 2% per year in hidden costs. The worst part of that is that they weren't receiving any value. There was no plan, there was no guidance, and the investments were underperforming. That's why transparency matters. When you know what you're paying and you know what you're getting, you can make an informed decision. Make sure you have a proper plan in place and your money is being used wisely and not being eaten away by hidden fees. Planning costs are real, but with transparency and proper advice, they can work out in your favor. Along with planning, there are investment costs to consider. Let's take a look at the most common, but also the most hidden costs, MERs, or management expense ratios. Ever wonder why your investments don't grow as fast as you'd expect? Well, MERs can be a big part of that. An MER, or management expense ratio, is automatically deducted from a mutual fund or an ETF. That cost covers things like investment management, the administration, and other pieces like marketing of the fund. Now, the MER on an ETF usually doesn't include an advisor fee, but many versions of mutual funds have a 1% trailer that's paid out to an advisor as part of that planning cost. As you're probably well aware, the difference, even if it's small on the cost of an MER, can add thousands of dollars to your retirement. MERs aren't just numbers, they can affect your long-term wealth. You have to know what you're paying, and again, make sure that you're receiving value by way of increased returns or lower risk for the costs that you're paying. So we looked at MERs, which are attached to mutual funds and ETFs, but there are numerous different versions of mutual funds. So let's look into that. Not all mutual funds are created the same when it comes to fees. The most common mutual fund is called a Series A. In these mutual funds, the planning cost for the advisor is embedded into the MER. Series F funds separate out those planning costs from the investment costs. That means your advisor charges you directly for the planning costs. And it also means that fund is a little bit cheaper with less admin costs from having to pay out the advisor portion. So to sum that up, your Series A has a higher MER with the embedded advisor cost. Your Series F removes that advisor cost, so has a lower MER, and you get charged separately for the planning from your advisor. As we know, lower MERs means tens of thousands of dollars left in your pocket. So have a look into what series of fund you hold. It could make a big difference in your future. So we've gone over the largest and most common costs, but let's have a look and see what else you should be aware of. Fees aren't just hidden inside of the funds. They can show up everywhere. Other costs you could incur include annual fees, registration fees for RSPs and TFSAs, transaction costs on your trades, whether that be for stocks or ETFs, or in some cases, even purchasing mutual funds. And that leads me to other mutual fund purchasing costs. There's upfront costs that we just discussed. There's also deferred sales charges, which are no longer a practice, but used to be an upfront cost with a potential cost to selling those funds early. And lastly, currency conversion exchange rate costs. Knowing all of your costs and making sure that they provide value is going to add money towards your goals and your future. Now that we've gone through the costs, let's look at the value that you should be receiving. Because costs only matter in relation to that value and making sure that it's all worthwhile. One big value of planning and working with an advisor is confidence and clarity. The real return on planning isn't measured in dollars, it's measured in your peace of mind. Yes, planning does have a cost, but when done right, it adds confidence and clarity to your life. Instead of wondering, am I saving enough or will I be okay? You're going to know exactly where you stand and have steps to take you towards your goals in the future. Good planning means your retirement, your home goals, your child's education, and even your tax strategies are all working together. It's not just about the investments. It's about making sure your money is supporting the life you want. That confidence you receive is priceless. A plan removes your stress and replaces it with certainty. And that's the true value of planning. Along with clarity and confidence, another value that an advisor can add is removing that emotional side of investing and the costs that go along with that. Markets go up and down. Don't panic. Investing isn't just about picking the right investments. It's about staying disciplined for the long term. How do you feel when the market drops 15% or 20% or worse? Working with an advisor can help you understand that these market corrections are normal, that you're going to be better off in the long term by staying invested in a quality portfolio, and that these market drops even offer opportunity to some investors. An advisor would have been rebalancing your risk levels to make sure you weren't taking on too much risk when the markets were high. And that same rebalancing can help add to the risk level when the markets are low. And most importantly, having that financial plan to ensure that even with the market correction, you're going to be okay. Discipline today leads to better results tomorrow, and a plan can help that stay intact. That leads to one of the most obvious but often overlooked values of working with an advisor: personalized planning. Your goals are unique, and your plan should be too. No two people have the same financial journey, and life is constantly changing. You need a realistic plan that can adapt and change to what life throws at you. Are you saving for a house, saving for kids' education, looking to start a business, or perhaps retire early? You need a personalized plan and not just cookie-cutter RRSP advice. Personalized planning helps your money work for you and not the other way around. Part of that personalized plan, and another huge value that an advisor can bring, is tax efficiency. It's not just what you earn, it's what you keep. Taxes can take a big bite out of your returns. Advisors can help you structure savings and withdrawal plans to reduce the taxes you pay. In many cases, optimizing incomes and savings tax efficiently will be the biggest impact on your financial goals. Saving and withdrawing the optimized amounts in RRSPs, TFSAs, RESPs, and corporate accounts, along with maximizing and optimizing the portfolios themselves within those accounts for tax efficiency, is going to save you thousands of dollars that'll stay in your investment plans. Did you want to retire early, travel more, or leave a bigger legacy? Optimizing and minimizing the amount of tax you pay in the long term is going to be a big help. Smart tax planning today means more money for you tomorrow. Last but not least, on the values an advisor can bring is accountability and life transitions. Life changes, and your plan should too. Advisors provide accountability, automated contributions, and regular check-ins. Major life events like marriage, children, career changes, retirement, all of these are handled smoothly to keep your plan on track. Creating a financial plan is only the first step. If you take that plan and put it in your drawer, it's not going to help you. An advisor works with you to ensure that that plan is acted on and is adjusted as life changes. The real question isn't just what does it cost, but also what is it worth? With the right guidance, your money will work smarter, your goals will stay on track, and your future will be secure. If you're unsure about the value you're receiving, or even worse, you don't know what you're paying at all, then book a free consultation and we can run through that with you. Let's make sure you're receiving the value for the costs that you're paying and that your finances are working for you.